Good afternoon, everyone. Welcome to our session on GST on expatriates. So the reason why we are conducting this webinar is in last couple of months, we have many of our clients approaching us who have either got summons from DGGI, who are getting audit objections, who are getting show cause notices on the ground that whatever expatriates have come to their companies, on that GST is being applicable. So many of you will be aware that the background of this dispute is Supreme Court ruling in case of Northern Operative. Even though the ruling itself said that it's a fact-specific ruling, but the ruling fell short from saying that what are the determinative tests where it will be treated as a employment or services. Unfortunately, CBIC also did not issue any clarification as to what criteria should be satisfied for a company to prove that the expatriates qualify as employees or not. We are seeing on the ground that DGGI is indiscriminately applying this ruling to every case where expatriates are there. So unfortunate part is that every year for last few years, we see at least one Supreme Court ruling which is unsettling the whole issue. Like in the past, we have this Westinghouse ruling which adversely impacted the automobile sector. Now we have this Northern Operative ruling. So the disputes continue. Today is one of the unique webinars in which apart from many participants attending, there are a lot of expatriates who are attending the webinar. So I got special requests or messages from our expat clients that to go a bit slow because they are not that fluent in English. So yeah, from that perspective, I'll be going a bit slow in today's session. So the contents of this webinar are that we'll discuss the underlying arrangements. What is the law? What is the exact controversy? In our view, what are the things determinative of employer-employee relationship, GST implications, way forward, and we'll sum up the webinar with live question and answers. Starting with underlying arrangements. So foreign entity sends its people on secondment to Indian entity. These people are sent primarily for two purposes. And in our view, these two purposes are different. And in the subsequent part of the session, it will become clear why this distinction is relevant to keep in mind. First purpose can be that the foreign entity needs a back office support, because of which it sends people to its Indian counterpart. So people come from overseas to India, they become part of Indian entity. In turn, they provide back office support to foreign entity. Second can be that Indian entity is in the phase of initial setting up, etc., for which people are being sent. Second is running business of Indian entity, which in our experience is 70 to 80% of the cases that Indian entity is regularly conducting its business, and either as part of management or as part of leadership, it needs experts who comes as business heads, directors, functional heads, etc., in Indian entity. Seconded employees can be paid in primarily two ways. As far as monetary compensation is concerned, we have seen clients where Indian entity pays full amount. There are cases where full amount is paid by foreign entity. And third is a hybrid where both entities paid some part. Second, another important aspect is that Indian entity gives perks or perquisites to the seconded employees by arranging accommodation for them, vehicle for them, etc., etc. Documentation, which is generally seen in these cases. So many of the companies have this global mobility policy dealing with secondment. In some cases, we see a specific secondment agreement as well. There is an employment letter which is issued to seconded employee. Generally, these employees come on employment visa. There's a FRRO certificate. Indian entity undertakes these compliances under employment laws like PF, etc., and under income tax law, where whatever are the emoluments of the seconded employee, the TDS is being deducted as salaries under section 192. Common features which are there in these arrangements are duration of seconded employee, which can be 2 years, 3 years, depending on company to company. Duties, what exactly work he is expected to do. Policies, which can be working hours, leaves, perquisites, etc. In subsequent part of the session, you'll realize how important it will be to determine GST liability. Responsibility and risk of work during secondment. So will the employee be responsible for its work or the foreign entity? Whether seconded employee continues to be an employee of foreign entity during the tenure he is in India or not. And lastly, once secondment is completed, whether he is repatriated back to the foreign entity or no such right exists. Coming to the law part, under service tax law, there was a negative list which clearly provided that services provided by employee to employer are not chargeable to service tax. So if I'm an employee working in your company and I get, say, a monthly salary, bonus, etc. So whatever services I'm providing to you will be outside the purview of service tax law. Similar exclusion exists under GST law also, where Schedule 3 says activities which are not treated as supply. So services by employee to employer are outside purview of GST. So in nutshell, if a taxpayer can prove that whatever amount is paid to, say, the seconded employees is by virtue of employment, or seconded employees providing employment services, then service tax / GST is not applicable. So what exactly is a controversy? So yes, we have Northern Operating System Supreme Court ruling. So let's understand what were the facts before the Supreme Court. So I want to highlight these are the facts before the Supreme Court. This is not what the Supreme Court held. What Supreme Court held, we'll discuss in the subsequent slides. So employees were seconded for providing back office support services to foreign entity. This movement took place in terms of global mobility policy. Indian entity became employer in all respects. Deputation was for specific duration and, more importantly, for specific tasks. So whenever these people came, it was very clear that these things, these projects, these activities they need to do. Seconded employees had specialized technical skills. Their compensation was fixed in foreign currency. They were also being paid a hardship allowance for moving to India. They continued to be employee with foreign entity, and social security benefits also they were entitled for. Lastly, other employment terms and conditions of seconded employees, they cease with a foreign entity for the period during which they were Indian employees. They were employees of Indian entity. Now, what did the court held? Court held that foreign entity has provided manpower supply services to Indian entity. So this was a conclusion. Now, the most important aspect is what were the factors based on which Supreme Court came to this conclusion? So Supreme Court held that direction and control test. So in context of employment, direction and control test will be ability to direct them what they have to do, right to hire, whether a particular employee I want to hire or not, right to fire, means I terminate his services, I'm not needed, to force them to work as per the policy of the Indian entity, like working hours, holidays, etc., etc. So these are generally direction and control tests. So the Supreme Court held that direction and control test is not the sole criteria to determine employment. They did not totally disregarded it, but they said that this is not the sole criteria. They laid a lot of emphasis on the point that the employees were seconded for providing back office support to foreign entity. So the Supreme Court specifically laid down that these seconded employees were working in relation to business of the foreign entity. So even though they were physically based here, but they were doing work of the foreign entity. In our view, this is one of the very important factor weighed in Supreme Court's mind to come to this conclusion that the seconded employees continue to do the work of foreign entity only. Second most important part was the terms of employment also continued as per foreign entity, be it the emoluments, be it the hardship allowance, be it the leaves, etc. So based on these factors, these two factors, the second and third sub-bullet, that the employees were providing back office support to the foreign entity and the terms of employment were as per foreign entity. In our view, these were the only two categorical findings given by the Supreme Court to come to this conclusion. There is no third factor in the Supreme Court ruling. Based on this, the Supreme Court held that Indian entity is liable to pay service tax under reverse charge. Very importantly, and which goes adverse to many of the taxpayers, they said revenue neutrality argument is irrelevant because be it service tax or be it GST, like GST is applicable from 2017. Suppose all of us were knowing that from 2017 onwards only, we were liable to pay reverse charge GST, we could have paid and very well taken the credit. There would not have been this litigation, interest, penalty, exposure, etc. So one of the strong point which was put up before Supreme Court was that entire transaction is revenue neutral. So they totally disregarded. They said, we are not concerned whether you are entitled for ITC or Senvat credit or not. If tax is payable, it has to be paid. But yes, they said that extended period is not invocable because there cannot be any fraud suppression, etc. Prior to that, there were many favorable rulings. Recently, we have Dell International ruling also, which came last week only. If we see the rulings, facts and agreements were unclear. But yes, the CESTAT relied upon Northern Operating ruling. So it seems that in case of Dell International also, they were providing backend services. But yes, from ruling, it's not clear. And they held that Dell is liable to pay service tax under reverse charge mechanism. So we'll just halt here. In our view, as far as Northern Operating ruling is concerned or Dell International ruling is concerned, this will apply only in fact-specific instances, only in situations where the Indian entity provides backend services to the foreign entity and the terms of employment are totally as per foreign entity, not in other cases. So post this, we were expecting clarity from CBIC. So at least they will lay down some criteria that in these cases, this ruling will apply, or these are the determinative tests for deciding whether employment exists or not. But yes, they have started investigations seeking multiple documents like annual reports, secondment agreements, understanding letters with employees, details of payments, allowances, and Form 3CB and transfer pricing study report. So the silver lining in our view, which still exists, in our view, it's not an open and shut case. Even if we read the Supreme Court ruling, the Supreme Court, in very clear words, it states that it's a fact-specific ruling. It does not have any universal application. Further, there are two more findings which Supreme Court has given. Supreme Court clearly held that there was no manpower supply service if seconded employee was performing tasks for Indian entities business. So this is what Supreme Court has held, that the service tax liability does not trigger if these people work for Indian entities business only, which fully supports our earlier point that it will apply only in cases where there is a backend support provided to foreign entity. Secondly, reimbursement of salary of seconded employees is natural if employee is working for Indian entity. This is also Supreme Court held that suppose foreign entity was making payment to the employee and was seeking reimbursement from Indian entity, there's absolutely no problem as long as employee is working for Indian entity. The second set of we see silver lining or important aspects to be kept in mind was that before this, there were at least 20 rulings of CESTAT which were in favor. There was one only which was against. And a couple of more cases which were in favor stands pending before Supreme Court. One is in case of Nortel Networks and Komatsu India. So sooner or later, these matters also will come up before Supreme Court, and we'll see how Supreme Court deals with these cases. There is another set of jurisprudence under service tax and GST law, which in our view is relevant. This is in case of directors' remuneration. Some of you will be aware that both under service tax and GST, there was a lot of confusion or debate that if a company has a director, so whatever compensation is being paid or remuneration which is being paid to the director, will it be considered as a salary? If it is salary, then no service tax or GST, or will it be considered as a fee for professional services, which will attract GST? So finally, CBIC issued a circular in June 2020, which clarified that whole-time director is an employee. He may function in dual capacity, both as an employee as well as a service provider. Circular clearly distinguished between contract of service versus contract for service. And the CBI circular clearly relied upon treatment under income tax law, that if the payment is made as a salary, TDS is deducted under 192, then it will be salary, otherwise it will be professional fee. Couple of tribunal rulings which are relevant, which were again in respect of directors only. One was Methanol CESTAT, in which case one of the factors which CESTAT considered was whether the director is responsible for his defaults, offenses, etc. or not. So this should be a test to consider whether he is an employee or not. Then we have a CESTAT ruling in case of Rentworks India, very important ruling, where CESTAT held that different branches of government cannot give different treatment. If income tax department is saying that TDS needs to be deducted under 192, then service tax department cannot say that it is not a salary. Now, apart from these distinguishing features of Northern Operative ruling, which we discussed, some cases pending before Supreme Court, director-related jurisprudence, which is in favor, it's also important to understand what is actually meaning of an employee? Where does an employer-employee relationship exist? So employee is defined in various dictionaries, which you can see on screen. It is defined in various statutes like Factories Act, ESI Act, EPF Act, etc. And one common thread is that if a person is getting wages for a particular piece of work, then he will qualify as an employee. So from that perspective, the definition of employee is very wide, which in our view, most of the seconded employees will satisfy. Then even Northern Operating Ruling placed heavy reliance on the Supreme Court ruling in case of Sushila Bain, which laid down various factors or criteria to determine whether employment exists or not, qualification and age requirement which employer wants for the employee, is employees' work integral to the business or it's just an accessory, how much control and supervision exists on allocation and execution of work, how he's being remunerated, is it a fixed amount or is it a variable amount? Does employer has control over working hours, leaves, etc. or not? Does he have disciplinary control? Does he have right to terminate? Is there a retirement age or not? So all these factors were considered by Supreme Court to come to the conclusion to determine whether employment exists or not. If we see on the direct tax jurisprudence also, from various rulings, the tests which emerge are the existence of direction and control, who bears the risk and responsibility of work of employee, rules, procedures, practices, etc. Very important factor which is considered in direct tax side is whether it's cost to cost or is it with markup, how income tax compliances have been undertaken in India, is there a right to terminate or not, is there a right to recall or not, and does the employee continues with foreign entity post secondment or not. And if we apply these two tests of back office operations, etc., and test it from direct tax jurisprudence, so nature of activity undertaken by employee or by the Indian entity is relevant. So to that extent, there are two adverse Supreme Court rulings in case of Centrica and Morgan Stanley. But yes, in both these cases, there was a back-to-back support only. And recently, there was a Flipkart Karnataka High Court ruling, which also considered Northern Operative ruling. But yes, in that case, because there was no back-to-back support, so they said that it is not fee for technical services, it will qualify as employees only. Now, governing of terms of employment, how salary payment is being done, terms of vacation, hours of work, etc. So there are a couple of rulings like BISE and the recent ruling of Google, both by ITAT. Now, coming to the GST implications, in our view, if GST is payable, then it will be payable on three elements. One, whatever amount has been paid to the seconded employee. So that will be irrespective, even if he's paid in Indian INR, because we got a lot of questions from participants while registering. So one specific question was, even if Indian employees paid in INR, then RCM will apply or not? Yes, it will apply, because in that case, it will be considered that you received services from foreign entity and whatever you made payment to the seconded employee was on their behalf. Second element which will be added is amount remitted to foreign entity. And third is whatever amount was spent for the perquisites like accommodation, car, etc. One important aspect we should always keep in mind, which can be relevant for the past as well as future, is that we have Rule 28 of CGST rules, which deals with value of supply between related parties. So the second proviso clearly says that where recipient is entitled for full ITC, value declared in invoice will be deemed to be the open market value. So in case of related parties, GST is payable on open market value, but law specifically provides that where recipient can claim full ITC, you can declare any value on the invoice and that will be acceptable. So even if for secondment, Indian entity is paying 1 crore rupees, it can adopt 1000 rupees as the assessable value. That will be sufficient compliance. And this proviso has been consistently accepted by various advanced ruling authorities in respect of cross charge, stock transfers, etc. Another question which is raised by many participants is ITC availability if it is being paid for the past. In our view, if it is paid for the past, it will be available, because for reverse charge, the relevant document for claiming ITC is self-invoice, because tax payment is being made now. So self-invoice will be dated today. So Indian entity can generate self-invoice, it can pay the tax, it can take ITC. In our view, the bar under section 17(5), which some clients ask also, that the payment has been made under section 74 because of fraud, etc. In our view, that bar will not apply, because of the Supreme Court ruling only, the law got settled or frankly got unsettled. Before that, Indian entities can always say that they were under bona fide belief that tax was not payable. Very important is we have just tabulated that what is the last date for revenue to issue show cause notice, because many clients have started getting these notices. So it will depend on the financial year to which it relates. For 17-18, if it's normal period, I think there is an error. It will be June 30th, 2023. Whereas if they invoke extended period, it will be July 31, 2024. For 18-19, it's 3 months later than June. It's September 23. And similarly, 19-20 normal period is December 23. In our view, because the Supreme Court itself held that extended period is not invocable, so the second column is only relevant. But yeah, for the completion, we put the extended period timelines also. So yes, because these timelines are fast approaching, this is a reason for which you see these heightened investigations, etc. So now we'll come to this last slide from our end, which is way forward. So one, assess underlying arrangements, how much similarity, dissimilarity exists with Northern operating. In our view, in most of the cases, it will be dissimilar only. Very importantly, strategize what has to be done. So many companies, what they have done is that for the past, they have paid entire GST under protest, written a clear letter to the authorities that they are not agreeable with the stand, how their facts are different from Northern operating, but still because it's a revenue neutral transaction, they are paying it. And for interest and penalty, they'll fight. For future, many companies have again under protest, they have been paying GST on a monthly basis to arrest the interest liability so that the interest meter stops, and they are taking ITC. So yeah, so depending on facts, etc., you need to strategize what has to be done for the past and future. You need to participate in proceedings with DGGI, whatever information they are asking, we need to give. But yes, our participation, furnishing of information, etc., should be in line with our strategy. So as we discussed, you can consider both for the past and future. You can consider both for the past and future, you can pay GST under protest without interest and claim ITC. Very importantly, you need to align your position with direct tax laws. And in our view, the option of payment under protest will also protect you from direct tax laws, because if it is considered as a service, then under direct tax law, two issues can come up. One, is it a fee for technical services? which has its own withholding tax provisions. And secondly, there may be a PE exposure also. So by paying under protest and not agreeing with them will help you protecting under direct tax laws as well. So with this, we come to end of today's session, and we thank you, all of you, for joining in that large number. Yeah, goodbye and happy Holi to everyone.